So Evenlode Global Equity invests in a portfolio of high-quality businesses that can compound cash flows at an attractive rate. We look for high-quality companies that can compound cash flows over the long term. Typically, these businesses have high initial returns on invested capital, but more importantly, they can maintain and grow their returns on capital over time. These businesses will commonly share three attributes. They operate in growth markets, they have a competitive advantage, which allows them to over-participate in that growth, and they invest strongly behind their competitive advantage, which means it's improving at the margin. So at Evenlode, all companies that we consider for investment are evaluated across 10 fundamental risk factors. These enable us to properly evaluate the risks that each business faces and to take account of them in our position sizing over time. This includes risks ranging from some more quantitative risks, such as balance sheet and cash generation, all the way up to competitive advantage, long-term industry outlook, and ESG risk. So ESG is both incorporated in our risk framework, but also is an important principle in making sure that we can screen out companies which may not have a long-term opportunity over time. We engage with every single business that we invest in, and we vote all proxies ourselves. So the Evenlode approach is to focus on companies that have very resilient cash flows over time, which means we have good downside protection on the portfolio. This makes it a suitable holding for a core part of an investor's portfolio and a good complement for growth and technology funds.